Welcome, everyone. It's Friday, January 19th, and we're doing the WSBA Crypto Roundup today. My name is David Brill. I'm coming to you here from Fort Lauderdale with my co-hosts Ron Quaranta and Josh Klayman. Before we begin, please keep in mind that nothing discussed today should be considered accounting, investment, legal, or tax advice, and the opinions expressed are our own. It may not represent the views of our respective teams. We have a packed call today. We had the Coinbase hearing. We've had the first full week of trading in the ETFs. Ron, what events really has gotten you focused this weekend? What do you want to share?
I want to start off by calling out that, Josh, if you notice, David specifically had to mention Fort Lauderdale, while you and I look out our respective windows in New Jersey at several inches of snow. Yeah. So thank you, David. Look, I mean, there's a lot that's been going on. We had and I'm so grateful, David and Josh, for the thought leadership you both have. We had our Bitcoin spot ETF webinar earlier this week, which I thought was amazing, and it was great to hear everyone's perspectives. We had our listen party, SEC v Coinbase, the motion for judgment, I believe. Correct me, Josh, if I'm wrong. And we had members across the legal ecosystem just kind of listening into the core proceedings. It's been an eventful start to the year, and despite the price action, I'm a bit heartened at the way things are turning. But Josh, do you see it the same way?
I see it the same way. I think, yeah. And just to mention about the listen party, yes, it was the motion for judgment on the pleadings.
Thank you.
That had been brought by Coinbase, which was fascinating, and I'm sure it will be the first of many listen parties that we have.
So, Josh, as we kind of look into that hearing, first of all, a few things that struck me were we had 4 hours of oral arguments. We had 6 amicus briefs filed by friends of the court on behalf of Coinbase. What were the couple of items that really caught your attention from the hearing?
Wow. So there was a lot. I think, some of the interesting points to me were, and I don't want to color anyone's view who wasn't listening in, right? Because these are just impressions. And of course, we don't know what the judge is thinking. But I think it's important, of course, just stepping back for a second, that we remember, because it was a motion for judgment on the pleadings, that, the facts were supposed to, the SEC made clear, was saying during the hearing, look, if there are disputes in alleged facts or something like that, we're supposed to look at it in terms of what was pled, whether something was properly pled by the SEC. So that's one thing to bear in mind. But some of the things that jumped out at me, one of them was the judge was really prepared.
Yes.
Not that we should be underestimating judges, but I thought in terms of both understanding the facts here and being able to recall some of the specific differences that were presented by each side, but also really looking more broadly and thinking about future implications. There was a point at which Judge Fela had said, well, wait, do we risk, saying that collectibles more broadly are going to be deemed by the SEC to be securities? And really, it seemed that there was at least some kind of hesitation, maybe I'm reading into it too much, to really be making these questions all about the secondary market. So there were questions about, are you focused on the primary sales, on secondary sales, things like that. So that was part of it. I also think, and Ron, the way you described this immediately prior to this session, I thought was great. In terms of talking about the major questions doctrine. Right. And then the flip side of that, I don't want to steal your thunder for the way that you described it. No. If you remember what you said.
I'm trying to remember, certainly. I just to chime in there, Josh, if I could, I agree with you about the judge. On Judge Fela, one more thing, I was really pleasantly, and surprised is the wrong word, but she gets the tech too. Like, she got DeFi. She understands, maybe at not a programming level, the mechanics of that. She gets staking, and she understands the mechanics of that. And we weren't in the room, but you can almost imagine an attorney from the regulator going, "Wow, okay, she kind of understands it." I don't remember what I said about major questions doctrine, but it'll come to me eventually, Josh.
I think maybe I can prompt
Yeah,
you
go for it.
slightly. You were talking about having your cake and eating it too.
Yes.
So
Yeah.
if you remember what your quote was, I
I
won't say it,
do.
but
I do. Well, I mean, part of what the SEC attorney, and again, I'm not an attorney, so with all due respect, I get that they've got that job. Part of his comment was, it's a $1 trillion market. It's a rounding error. So, on one hand, you have the talking heads in Washington saying this is a rounding error. It's totally insignificant. And with the same breath, they can turn around and say this is a systemic risk to global financial markets and, facilitates illicit finance. How can you have your cake and eat it too in the context of describing a marketplace that's calling out for proper regulation or legislation and at the same time minimize that marketplace is just stunning to me. One other thing, Josh, if I could, on the during the listen party during the court case, and again, I don't know the SEC attorney. I don't envy the job any attorney in that court has to do. But I was pretty taken aback at what in my mind was a bit of circular logic. Like the judge kept coming back to something that was astounding to me, and which was, and I think she said this a couple times, don't mention Howie in this particular question or context. Clearly because she deeply understands it. But when you started peeling back the layers, it was through in a common enterprise. And you almost heard the question in the room unspoken, Josh and David, which was, well, what do you mean by enterprise? Which was something that stuck in my mind. And at one point, I think collective heads exploded. I believe the attorney for the SEC noted, the judge had said, why is Bitcoin different? Or someone had mentioned, why is Bitcoin different? Well, there's no ecosystem, I believe was the word, behind Bitcoin. And part of me was like, wait, what? Like that, how is that possible in the context of this discussion? So yeah, clearly I've got a lot of opinions about that courtroom session, Josh.
what about you, David?
Well, I was really listening intently, and we had the watch party, so I had the pleasure of sort of doing a little play-by-play with Sam Enzer of Cale Gordon, which was great. And
Shout out to Sam, by the way.
yes, and it was really enjoyable to sort of hear his perspective, share some ideas I had, and just facilitate. So that was great. I think the SEC, in an oral argument in front of a well-informed judge, struggled with these kind of going back and forth in the arguments they were trying to make. Like Ron highlighted, I think that they really have an issue with their definition of investment contracts. And one of the notes that I took was, it seemed like the judge wanted a limiting definition, wanted to limit the SEC's definition of an investment contract so that it wouldn't start encompassing, collectibles.
Yeah.
And I don't think that they did a very good job of articulating what that definition looks like.
Yeah.
And that dovetails into what Ron said, about, collectibles, and the Bitcoin has an ecosystem. We all know it does. There's a foundation. There are different parties. One of the ETFs is donating, a part of their profits to the Bitcoin Foundation to help maintain the ecosystem. So I really think that their attempt to expand the investment contract definition is really going to be untenable in a court proceeding. Because look, the baseball cards, a number of us collected them, or football cards when we were younger. The NFL Players Association, the NFL on the whole, they benefit from people buying those cards, being interested in football and watching the games. And so there is a connection there. And so she used the Beanie Babies. I never really had a Beanie Baby, but people are collecting things. Look, I think sometimes people collect things because they enjoy them, and sometimes they collect things because they think they're going to go up in value. Like I think of watches as an example. Like some people like to wear watches. Some people like to buy them because they think they're undervalued and they'll be worth more.
Or
Same
both.
thing, art. If you have an artist, like I was a big fan of Leroy Neiman, I was like, oh, he's a great sports artist. I liked his art, but I also thought it would appreciate. So is it a security because I bought it because I thought it would appreciate, or is it not because I bought it because I'm a sports fan and it's really interesting art? I don't know how the SEC gets out of the box on that question. And I think that's a thorny one for them.
David, Josh, can I just throw one more question in there? And again, I know this, I want to offer as much, all deference to the SEC attorneys and any of the attorneys and the judge in the room. One of the things I struggled with was it didn't seem like the SEC attorney gave answers to some of the judge's questions. And one of the examples that stuck out for me was what you were referencing, David. It was this idea of collectibles. And I think the judge actually referenced Beanie Babies. And she said something along the lines of this, and I'm totally paraphrasing, something like, this feels very sweepingly broad. Like it can scoop up a lot. And again, to paraphrase the attorney, and I'll listen to the recording again, his answer was, no, it wouldn't. But I mean, it's just, but that's not an answer. Like, what is the limiting principle? And I think she used the words limiting principle repeatedly.
Yep.
And I'm not a lawyer, but I didn't hear the answer to the question about limiting principle that made sense in my mind.
Yeah. What do you think, Josh?
I mean, so that stood out to me as well. The comment back from the SEC lawyer, which essentially was, we're not trying to take in to
Beanie Babies.
capture collectibles here, because the judge was trying to say, does this cover things like NFTs? Does this cover, or all sorts of different things? And so at first I was kind of heartened by that, like, okay, great. Well, is this, what does this mean? But then, as was pointed out, and I don't recall whether it was pointed out by you, David, or by Sam Enser, who very rightly said, well, yeah, but just what is said at this hearing, that isn't binding upon the SEC in the future. And that's part of that creep is part of the problem, right? So I think, I do think one other thing that jumped out at me, and this goes to what you guys were saying about technical understanding, when the staking discussion was going on and the judge was trying to really ascertain what the risks were, like saying like, okay, well, but they'll get their token back, right? And so the SEC was talking about different kinds of risks, including slashing. And I think at one point the judge said something like, but that slashing is a low risk, right? And I just thought that was so interesting. I didn't think, although please let me know if you think otherwise, I didn't have the best feeling about the judge's view about whether the major question doctrine would be invoked here. What do you guys?
If you look at her commentary about it, she's really, really smart, obviously, but she's also wise about, I think she said the phrase in the reporting was, "I want to stay in my lane," which is, I don't know judges, but I would argue there's probably some judges that are more than happy to make every lane their lane. But Judge Fela seemed very much to understand the implications for invoking or challenging major questions doctrine, particularly with, if I recall correctly, there's a Supreme Court case coming up that specifically deals with the major questions doctrine. And I kind of felt the Chevron case, right? Thank you. And, Judge Fela's got enough on her plate with this case as it is, let alone something becoming a major questions doctrine item. But one thing to add to that real quickly, and I think Sam mentioned this, her perspective on staking seemed to be slightly more amenable, if we're going to read the tone and tempo of comments, to the SEC's perspective. But the one thing that came out, and David, Josh, tell me if I'm wrong, I believe the SEC cited that stakeholders no longer control their token when they stake it at Coinbase, for example.
Yeah.
I'm not sure. I haven't looked at terms and service in a while, but I don't know that that's necessarily correct.
I don't think that's correct. I think it depends on the protocol and how long you need to stake it with the protocol. So I think there's sort of back-to-back obligations that if you're staking Avalanche, I just picked that one out, and they have a 14-day hold period for staking, I think Coinbase is just providing sort of back-to-back obligations on, 14 days because Avalanche is seeking 14 days. And again, that's a pure example. I don't know how many days they have for staking. So I think that's wrong. I think that analysis is wrong, but I'm sure Coinbase will fix the record, for that. I was struck again by the amount of really articulate questions we heard from the judge on different topics. Like you said, Josh, staking, thoughtfulness on the investment, contract definition. I do want to mention that 6 amicus briefs were filed on behalf of Coinbase. DeFi Education Fund's brief was mentioned a few times, and I think that the amicus briefs did a good job of educating the judge on broader topics. And the judge may not have agreed with all the analysis that were in the 6 amicus briefs, but I think they did a really good job at educating the judge and giving her more color as she developed her own analysis. So I think shout out to the 6 groups that filed
Yeah.
the DeFi Education Fund. I think it's really important work. As our friend Jason Gottlieb, I think, mentioned, it is very rare to see even one amicus brief filed in a district court case. So to have 6 is really tremendous, and it's great to see how the industry galvanized around positions supporting what Coinbase is saying. So,
David, is it this is my ignorance talking about the judge in the courts. I think it's Southern District where Judge Phil is. Are judges required to review amicus briefs and weigh in on and leverage them? And the reason I bring that up is, again, I think the SEC attorney noted, certainly acknowledged the amicus briefs and certainly acknowledged the DeFi Education Fund and paraphrasing basically said, yeah, but we should public commentary on this shouldn't weigh in on this decision. Or I'm probably screwing that up, Josh and David. But are they required to review those?
I mean, I think there's a first instance whether they accept them or not. In the
Right.
second instance, I'm sure if they accept them that they read
They're gonna
them.
read them.
They don't have to acknowledge them. They can just, it's a different resource. Look, I mean, clearly there are advocacy briefs for one side, but I mean, facts are facts. And and if they're citing cases and if they're giving, facts that can be supported, again, analysis is one thing, but the facts are what they are. So I do think they add value, and I think they helped educate the judge in this case. So I thought that was really helpful. So Josh, I'm going to pivot a little bit here. If you had to look into your crystal ball, what do you think the judge will do now? Like, do you think the judge will dismiss the case? Do you think the judge will dismiss some of the claims? What does your crystal ball look like?
Uh-oh.
It's a great question. I think that given the stage of the case, I think it's less likely that the judge will. Well, I think it's unlikely that the judge dismisses the case. I think it's less likely that the judge dismisses some claims, but not because of the merits or the facts, right? That would be a later stage. That would be like a summary judgment stage thing. I think in general, a lot of times cases are not dismissed on motions on the pleadings because that's based on whether something's properly pled, right? So that's what I think. But I do think that this argument setting the stage for the broader fights that will come on later. I think it's showing that this is really going to be a battle, and that the SEC has a big fight on its hands.
And the judge can kind of split some of this down the middle, right? In other words, when we're looking at the pleadings, some of them the judge may say that makes sense, should move forward, but others she potentially, Josh, could weigh in and say, I will judge on this specific pleading. How does that work for like those who don't know?
So I think this would be a great opportunity if we had a litigator on, unless David Brill can speak to this as well.
Litigators, reach out.
What I do wonder is if there is some kind of deficiency in the pleading. I don't know. I think all right. I'm just gonna what do your crystal balls say? Where do we come out?
My crystal ball thinks that there's more discovery to be taken, that perhaps, maybe she takes staking off the table. Maybe that's a little optimistic. I just think there's still a number of facts at issue that I don't know that, even though we may think that, there might be clear decision making to be made, I think there's still enough facts that discovery is warranted. I think because the case is so important too, that I think that maybe the better stage for kicking out some of the claims would be in a motion to dismiss after all the discovery is done. So I think that that's a possibility. But I also think that the opinion she gives will really direct all the parties to really give a window into what she's thinking and which claims maybe have more merit and which claims are on shakier ground. I think the investment contract claim is really hard to dismiss here on the pleadings, because if she doesn't take this on, somebody down the road is going to have to take this on. It's too much, it's too important of an issue just to leave ambiguous like this. At least that's my sense.
And
What do
this
you
won't
think?
be,
Yeah.
well, this one, I agree with you. I think the one thing I'd add is, a lot of colleagues in the space are like waiting with bated breath for the judge to weigh in. This may not be quick at all. This may
Yeah.
go many, many, many months.
Yeah. I don't, I think we might get an opinion in 3 months.
Yeah.
I think that's optimistic. I mean, look, anybody who sat through that hearing, like, just to sit and write an opinion, you need to digest everything that was said and really think about it and put it in context. So I think we're a couple of months away from an opinion. But boy, maybe we'll have to do another roundup when that opinion comes out, and we can broaden out our group here and include
I
a
am
couple
certain we'll have to, David.
of our litigator friends. But I do think one thing that did come out of it is that, we really have well-argued, well-reasoned positions about why, we think things in the ecosystem are working, why people don't think these tokens are securities, why the investment contract definition is so important. So I think there's really a light shown on these issues and about, the industry's views on these issues. One thing I want to raise is that I do have a due process concern about the constant mention of tokens being characterized as securities when we are not aware of actions against those issuers that the commission is alleging that they're securities. I think it is, in whatever context, not just crypto, but whatever context, it feels inappropriate to me to make these allegations unless and until those projects have a chance to defend themselves. And I think that's really problematic. And I hope there's a way that gets resolved, because, it's just not, it really can affect those projects negatively, and they don't have a means to defend themselves.
Is that a strategic choice on the SEC's part? I mean, we've had this conversation, David, in the past, right? It's go after the exchanges that put all these tokens out because we think, says the SEC, that they're securities, because there's thousands and thousands and thousands of them. The SEC couldn't possibly analyze each of them.
I mean,
it might be a weak claim.
Look, I think if you are going to put in pleadings that you think a token is a security, then I think you have an obligation to have had a dialogue with that issuer before you take that position. What do you think, Josh? I know that might sound a little strong from where I'm coming from, but like, if you're a token, if you were one of those projects that are mentioned, like if you were representing one of those projects that were mentioned, how do you think your client would feel about seeing that project being splashed as a security across, a major case like this?
Well, holding aside any representations that I might have,
Yeah.
right? I do think in general, it there is something about it that doesn't feel quite right, especially because a lot of the facts that that the token issuers or token generators, right, may have, the defendant in a case against a trading platform or an exchange, right? They might not have those facts to be able to say, like, actually, no, this is actually the case. And I think it's interesting in the arguments the other day that, one of the things that was focused on by the SEC was that the platform had all these links and information about the various tokens. Well, okay. Well, are they, if they haven't been shown to be, or proven to be securities, then what do we make of the fact that they have that information there, right? And there's that conceptual leap that, I mean, I can see strategic. I do think, to Ron's question, I do think it was a strategic move. Certainly to the extent that the SEC may end up with information that cuts against its own arguments as a result of discovery into other projects. That's one point. But also, I think, given the discussions in Congress, and given potentially even this being an election year, I think getting those cases out, I think saying like, no, we already, if you follow Gensler's logic that we have all the laws we need, right?
Right.
Then having some kind of line in the sand to say, and look, we're bringing suit against these right now, at the very time that Congress is discussing potential market structure changes. I think that in and of itself seems to be a strategic move. It reminds me of the suit filed against Ripple on the last day of Jay Clayton's tenure.
Right.
You know?
Could I just one more thing on the case? And I know we had other things to talk about, David and
Yes.
Josh. I just want to see if I'm remembering this correctly. I think one of the positions of the SEC in the court conversation was also that Coinbase, and I'm going to use the words probably incorrectly, actively marketed on behalf of the tokens. And it probably wasn't those words. I think it has to do with some of the links you're talking about, Josh. What is the perspective? I never looked at that and thought, well, Coinbase is specifically advocating for these particular token offerings. I'm not a Coinbase client, but does that carry weight? Is that necessarily true?
I mean, I think that they're trying to create some idea that they're like a market maker for these, or there's another word, a promoter for these issuers, and that the word is escaping me right now, but that they're acting in a way that they're promoting and marketing the issuance of these tokens. But again, we all know that these are, being traded on a secondary basis and not on a primary basis. The one other thing I'll say on the diligence is, the way I kind of think about it is, if you were selling art and you wanted to sell pieces of a famous artist, you would have links to, if the artist had a website, you might have links to the other art that the artist has sold in the past, or articles about that art that existed, or, maybe museum showings and things of that nature. So I don't know that sort of diligence around an offering of tokens on a platform in and of itself, makes them a market maker, or makes them a promoter of the security, if they were to be a security. It's the same way if you were buying like a famous baseball card, you probably have a link to their stats, and, they were in the Hall of Fame and the MVP. And so I think there's more work to do there. And I think that's something that'll be an interesting takeaway. But I do want to pivot, because the first week of BTC trading has gone on. There's been a lot of movement both on and ETF and price. And so, Ron, I'm going to start with you.
Sure.
We're a week into trading of the ETF. What do you think? What's surprising you, and what's caught your attention?
Well, I'm certainly pleasantly surprised at the inflows. I think I saw this morning that spot Bitcoin ETFs now exceed the market for spot silver, if I recall correctly. And, two of the things that really stuck out for me, David, was, it was BlackRock and, oh God, it's escaping me, the second one, that I think they're at $1 billion in AUM each now, maybe more. And I was sort of not surprised. I was always surprised by GBTC's fee structure, and I'm not weighing in on any judgment. I don't know Michael, the CEO there, or the team directly, but I was a little surprised in the context of BlackRock and these others offering fees that were 10 times less. So I really wasn't shocked at outflows particularly. It really comes down to what's the AUM and what's the volume. And the volumes look good in the context of the longer range of spot Bitcoin ETFs going forward. I think it proves there's a market there for this stuff.
Yeah. What do you think, Josh? Like, how do you think things are going?
I think a lot of people owe you steaks David. So getting back to, our prior call where you were saying you thought that actually there was going to be some profit taking, and that we'd
Yes.
see a bit of a dip while we're waiting for additional, pension funds and others to do their diligence about whether to come in. So I think that seems to be what we're seeing. So, your crystal ball's pretty good at this point.
Although I didn't expect the profit taking to be a profit, a walloping. I mean, the prices are pretty down relatively significantly, David.
Yeah, so I really did a little bit of research before our podcast, and I found sort of six or at least three or four really important bullet points I want to share. So in the first instance, as we all know, there's been a lot of GBTC sales. And so for those who don't remember, GBTC was the one legacy product that existed prior to all the ETFs being approved. And their trust product was converted into this ETP product. And so there was a lot of hot money that went into GBTC prior to this being approved because there was a discount to the Bitcoin spot price. So I'm not surprised by the GBTC sales. So I think that's one thing that didn't surprise me, excuse me. What is surprising to me that the Bitcoin miners are selling what's been reported around 10,000 Bitcoin a day. And, we had a conversation on our crypto asset working group about this. And, the prevailing view is that the Bitcoin miners really needed liquidity, and that anecdotally, there's some talk that some of the Bitcoin miners were having trouble raising money, capital, and that they're really selling their holdings to have liquidity going into the halvening. And I think that's not something a lot of us were focused on also. I think another thing is there's a lot of selling going on in the crypto bankruptcies. And so I don't know if we had sort of fully accounted for that. Like when we say we, just the general market. And, there's been a lot of unstaking of Ether in the Celsius bankruptcy. And, sometimes in these bankruptcies, the selling is a little imprecise. And so maybe, some of the volume and some of the trading is just going on that way. And, you're seeing all that volume sort of come in. And we also have to remember that, people who are creditors in the bankruptcies have had their value locked up for a long period of time. And so you can understand how, people want access to their liquidity and to sell to, use their liquidity. So that might be an issue. And then one of my favorite signs is that, and this is a bullish sign, is that since Jim Cramer is warning about a Bitcoin sell-off, that we might have a pickup over the weekend, and we might have a little bump up into the mid 40s or the low to mid 40s this upcoming week. Thanks to him, because he is truly the contrarian indicator on crypto.
The inverse Jim Cramer market
Yes.
trend.
I heard that you can retire if you call those right. There are two things I do want to mention that are positive. Is that so IBIT is over $1 billion in assets in AUM, which is great. Also, Tether has been buying. It's been reported they bought 8,900 Bitcoin with a value of approximately 380 million. So there's another party that's sort of sucking up some of the selling volume that's going on. But it's a really interesting dynamic here. But I'm going to repeat that I think that maybe we see one leg higher, and then I think unfortunately we're going to see a sell-off. And look, we have to remember that Bitcoin's been up a lot over the last 12 months. So I don't think people should read into that, negatively on a long-term basis. But that's just right now, that's the way sentiment feels to me, and that's kind of where I'm leaning. But again, I'm still, bullish on the space, bullish longer term, but just in the shorter term, that's what it feels like.
Yeah.
The last thing I'll say is, with all this selling pressure, we haven't moved down that much. So that is a positive also, because you can see the selling from GBTC. We're reading about the selling from the miners. We're reading about the selling from the bankruptcy estates. And so all things being equal, there is a pretty good counterbalance here. So I think that's a bullish sign.
Just to chime in there, Josh, real quickly, one of the things that is always the premise, and David, you said it's kind of the longer term thing, right? What happens, or when do RIAs, for example, start understanding and being able to make this available to clients? When do retirement plans more fully? So anyone who thought in my mind that there's going to be a BTC spot ETF approval and BTC is going to 100,000. That shows me they don't understand the market dynamics of this. But how long does that take?
Well, I think it's a dynamic of, with regard to RIAs, I think it's probably the under 40 crowd who will go to their RIAs and say, look, I want exposure. Some may go on their online trading accounts and buy one of the products out there. But it will take a while for the distribution networks to take hold. And look, I don't think RIAs were like picking up the phone on the first day of the approval and started smiling and dialing their clients. So I think this all takes some time. So I think we just need to be cognizant of that. And look, there's some market headwinds too, like the bond yields have been going back up. It's not so clear we're going to get rate cuts anytime soon. So, I mean, there are some macro issues that are out there. And look, there's, what's going on in the Middle East, there's uncertainty, the shipping lanes are being bombed. There's a lot going on. We can't even forget about Ukraine and Russia. So it's not like we're in a steady state in the world and we're trading here. And so I think those are things to consider too. What do you think, Josh?
So I agree with you. I think some interesting things I've seen too. There's an article on CoinDesk right now, and it's referencing K33 research analyst Vettel Lund. I may have said that wrong. Said that long before U.S. regulatory approval, there were already, spot Bitcoin ETFs in the rest of the world. And part of what we're seeing right now is inflows to the U.S. from the Canadian and European spot ETFs because of the lower rates or like the lower fees for the U.S. ones. So I think, crystal ball here, that many of the inflows may be people who are already involved, and that we are still, not investment advice, anyone, but just that, as you were saying, people can't turn on a dime and begin accessing. Theoretically they could, but realistically with clients and, as we talked about pension funds and others having to run their diligence and really understand the risks and stuff, I think we'll see much more, and that what we're seeing now isn't even really, it's not relative to everything else that we'll see. It's not, I don't know, I'm losing my words.
Yeah, no, we understand.
Yeah.
I feel, go ahead, Josh, I'm sorry.
There were a couple, if it's still on this topic, I want to stay with you because I have a couple of other quick thoughts about different things. So if you want to,
No. Continue.
Okay.
Oh, I was just going to say, with this week, with everything happening in Davos, certainly that's like a big place where a lot of crypto people in our industry are right now. And the focus is on a lot of what you're saying, right? The geopolitical risks, of course, talking about digital assets, talking also about AI and things like that. But I think many of the things that you've identified, David, that will likely have an effect on the market, those are being talked about in real time. There was one other really interesting thing. You guys may already be aware of this, but I just heard it in the past day. The proposed IRS rules that would expand the definition of
$10,000 reporting. Yep.
Yes. Well, we saw just this week something saying you don't need to comply with them yet because rules haven't been passed. But what I had heard is that actually, and you guys may already be aware of that, something like 120,000 AI generated comment letters were submitted, and in response to that, and that the IRS or Treasury would need to respond to all material comments. If this is the way that we're going, and I'm thinking about Davos and AI and everything else, and also thinking about Chevron and what you talked about earlier, like, what does this mean? If every new potential rule change gets 120,000 AI generated different letters, what's going to happen?
And is it by design, right, David and Josh? Is it meant to overwhelm? The WSBA responded to that open public commentary, as you know, Josh, and we did the work, the members. And then as you look at the listings, it's every one of them is the same. Like concerned citizen in the same 3 paragraphs. Concerned citizen number 34. And we kind of beat up on them, but I don't envy regulators having to sift through that.
Yeah. Well, look, I think I think with these different advancements, if you're going to propose regulation, you're going to have a real game plan about what it's going to look like and really be buttoned up before moving forward with something, because I think there'll be so much pushback if you're not, that it will inevitably delay the process. So maybe this has become another check and balance, on proposing regulation, and maybe just kind of, instead of, oh, we need this, and then figuring it out later, maybe it's going to force the details to be sort of fleshed out first, and then responding to those, multiple response letters. I know we've been running over, and I know the three of us could talk for 2 hours very easily. So, Ron, I want to ask you, what are you focused on next week, and what's going to be keeping you busy?
So what will be keeping me busy is continued work on understanding how SEC v Coinbase is moving forward. We will have the recordings of the events that David and Josh, we've all done in the past week, available to members as well. I'll continue to look at price action. I'm actually pretty intrigued. We hear about coupling a lot, David, and correlations. And, sometimes in the market, it's like, is the BTC correlated to the dollar or interest rates? And for a lot of time, the correlation conversation has been BTC and the alts. And the alts have just been pummeled. And I'm really interested in kind of doing the forensics on understanding where are the flows that are driving that, and who and what, how is that being driven in global markets. I do want to do a shout out to the chat from Mr. Tavares that we haven't addressed yet, which is CBDC Trump. What's your opinion? I'm not even touching that right now because that's probably its own full hour. Unless David or Josh, you want to weigh in. It's a good point, but yeah, we've hit the ground running in 2024, which is a good thing, and there's still a lot of work to do.
So, Josh, what's going to be keeping you busy?
So, a lot that I can't talk about. But one thing I'm excited about is our Wall Street Blockchain Alliance Legal Working Group meeting in person next week. So I'm really looking forward to that. I just came back last night from that event in Chicago that I mentioned. Yeah. And I took copious amounts of notes, and I will be reviewing that. But really, I mean, doing what I usually do, which is keep my eyes peeled for X posts, LinkedIn posts, and frankly, the usual suspects writing articles to kind of do shorthand for what's happening. What about you?
We also have to plan the dinner for David. I'm sorry, by the way, we have to plan the steak we owe David.
Yes, well, Wednesday night we can deliver on that because we'll be seeing each other.
That's right.
WSBA has an event in person next Wednesday, and I will be flying up to the frozen tundra on Monday. So I'm actually looking forward to being in New York. I have a number of meetings that I'm looking forward to doing, and being with the two of you on Wednesday night for our WSBA event, and then having dinner after that. So I'm really going to be looking at the Coinbase hearing as well, and rereading, different posts and whatever, and looking at my notes. And then I'm also going to be really diving into the alts and where we kind of think things are going. Chinese New Year's coming up soon, and that's another sort of point of where things tend to move a little bit. And also the last thing I'll say is, on the weekends are going to get more interesting, since the ETFs won't trade on the weekends. What kind of actions will we see in Bitcoin over the weekend, and how does that get mirrored on Monday in the ETF price? And I'm curious to see the mechanics of how quickly the pricing gets reoriented to reflect if there's a movement over the weekend. And then the last thing is, for next week, I think we'll talk a little bit about the potential ETF for Ethereum, and I'm going to be thinking about that some more based on this week of trading, and then in generally, where we think and when we think that could happen. Well, again, it's always a pleasure talking to the both of you. Stay warm. Don't hurt yourself shoveling snow, Ron. And
bring your galoshes, buddy, for next week. There'll probably still be some snow on the ground.
Take care, everyone. Have a great weekend.
Have a great weekend. Cheers.
Okay. Bye-bye.